So what we try to do is show you how to minimize your taxes. We show you how to have a tax-favored retirement. And a tax-favored retirement is different than a tax-deferred retirement or a taxable retirement, because those two are taxable at some point in time.
Right.
A tax-favored retirement means if it's structured properly, you're not paying any taxes, right? And then we look at interest. How do we get this interest under control? How do we rob these creditors, credit card companies, these student loans, these mortgage companies, these high interest rates? And interest rates are going to be going up soon. And some of us have HELOC loans, home equity line of credit, on our houses because the real estate market is inflated. And the lender said, hey, you got $200,000 equity in your house. You can go and get it today. Blah, blah. And people are getting it. But what happens when that variable rate goes up, they can't make the payment.
Right.
They can't make the payment. Now you got an issue dealing with your shelter, the roof over your head.
Right.
You got problems. So we try to give you strategies and ideas on how to be financially smart, not saying that you're not, and how to implement strategies in your individual life so that you'll be in a good place for retirement is concerned, that you're able to pass down wealth to the next generation, and et cetera, et cetera, et cetera. So the balance of that is 23%, and that 23% is what we live on. 23% is what we have our fun with, which is very little with 23%.
Exactly.
So
doesn't leave
much. Very little. You know, it's very little. So we try to change that picture. We try to increase the savings to at least 15%.
So we try
to reduce the interest down to 22%. To zero eventually.
Right.
And we try to reduce the taxes down to 30%. Right? So it's a gradual process. You didn't get in this overnight. You're not going to get out of it overnight.
Exactly.
Right?